Look, if you don't know the story, you're in for a real treat today because the person that we're talking about, Warren Buffett, whose current net value is worth roughly $150 billion. Well, some of the way that he's created that or amassed that massive amount of money is by selling put options. So the story that I'm about to tell you is a very famous story, widely known. You could look it up on the internet if you want. But here's how it goes. In 1993, Warren Buffett was interested in buying shares of Coca-Cola. At the time, in 1993, Coca-Cola was trading for about $39 a share. As a value investor, Warren Buffett said that Coca-Cola was not worth more than $35 a share, and he's not going to pay more than $35 a share. So with Coca-Cola at $39 a share, how could he buy them for $35 per? Well, as you can do today, you can put in a limit order with your broker and say, if the stock or if the price of the stock drops down to $35, Coca-Cola in this case, then buy me my shares while it's at 39. Now, there's never a guarantee that the stock's going to fall down to your limit price, and you may just be sitting there waiting forever for the stock to fall. But the one option strategy that we talk about all the time, which is selling put options, what Warren Buffett did at that time was he sold 50,000 put option contracts at a strike price of $35 a share. So what that means is that if Coca-Cola fell from 39 down to 35, Warren Buffett would have to buy 5 million shares of Coca-Cola at a price of $35 per share. Now, every option contract is worth 100 shares. So selling 50,000 put option contracts would obligate Warren Buffett to buy 5 million shares of Coca-Cola at $35 a share. Now, as a put option seller, you get paid for every single option contract that you sell. So what Warren Buffett did was he sold 50,000 put option contracts at $1.50 per contract. Now, $1.50 per contract in the options world is really 150 actual dollars. Every option contract consists of 100 shares of stock. So if you sell an option contract for $1.50 per contract, multiply that by 100, you get $150. So 50,000 times $150 is $7.5 million. Okay. So in about 2 minutes time, Warren Buffett sold 50,000 put option contracts of Coca-Cola at a strike price of $35. And in return, he collected $7.5 million like that in 2 minutes time, probably even less. All he had to do is call up his broker and say, sell me $50,000 of the Coca-Cola 35 strike put option. And he collected $150 for each contract. 50,000 of them. He collected $7.5 million. So what did Warren Buffett have to do to collect that $7.5 million? Well, all he had to do was he put in an obligation to buy a stock that he wanted at $4 cheaper than where it was currently trading the market. So what happens? Well, if Coca-Cola fell from 39 down to $35 a share, Warren Buffett would have to fulfill his obligation and buy the shares, the 5 million shares of Coca-Cola at $35 a share. And obviously, he had the cash to pay for that. He'd have to full on pay for the 5 million shares. He'd have to pay for them in full. He had the money to do that. But in the meantime, what happened was Coca-Cola never fell down to $35. It just kept going higher. So what happened? Well, Warren Buffett just walked away with $7.5 million for his obligation. Free and clear. Trade's over. He made $7.5 million. He never got to buy the shares at $35 because the stock never fell down to $35. So he just walked away with his $7.5 million and said, all right, well, I didn't get to buy the shares, but at least I made $7.5 million. So what Warren Buffett did was he made a ton of money by selling put options. This is something that we do all the time. This is our bread and butter. These are the types of trades that we make. Now, none of us are going to be playing on the same scale as Warren Buffett does, but you can understand that when you sell put options, you are going to make money. You're going to collect money for your obligation to buy a stock that you want at a price that you want. So let's quickly look at the stock chart here and just see what happened, see what Warren Buffett did at the time. And I'll show you how it worked. Let me move myself over here. So you see in front of you up here is the price chart of Coca-Cola. So let's go back in time to 1993 and take a look at where shares of Coca-Cola were trading at that time. All right, so actually let me go to the weekly, and then we can kind of pull this back here. We'll go back to 1993. Here we go. In 1993, Coca-Cola, you can see, okay, well, Coca-Cola has split numerous times, okay? So here, this is 1993 right here. And so you can see it's trading for roughly $10. So in between now and then, Coca-Cola has already split 4 times, 2 for 1. Here's one of the splits back in 1996. So this was trading roughly $40. This whole section right here, all of 1993 was trading for roughly, $40, $39. As I said in the story, Coca-Cola was about $39 a share. So if you can imagine this line, multiply it by 4 at where it is $10 now. So this whole section was about $40 right here. So Coca-Cola was at $39 at the time, and Warren Buffett said, I'm not going to buy it unless it drops to $35. So instead of him just sitting there waiting with a limit order, he was proactive and sold the 35 strike put options and collected his $7.5 million. Now you can see here, Coca-Cola traded at $40 a share for a good year and a half or so, and then it just went up to where it currently is now. Okay, so 1993 is way in the past. Coca-Cola is hitting all-time new highs. Anyway, so the thing is that if you, as a put option seller, you can do the same thing. You can sell put option contracts, make the money. All you have to do is find a stock that you like at a price that you want to buy it for, and look at the put option. So let's go to our interactive brokers and take a quick look of how you can actually do this. Now, there are certain stocks that pay a lot more than other stocks. Now, if we go to, let's look at Coca-Cola here, for example. Let's just say you wanted to sell some put options on Coca-Cola, and Coca-Cola is trading about $62.50 a share. What you have to do is, in order to sell put options, you have to figure out, okay, where would I be comfortable buying the stock if I had to actually buy the stock? In Warren Buffett's case, that was $35 a share. Now with Coca-Cola at $62.50, where would you be comfortable potentially buying shares of Coca-Cola? If that's just say $55 for you, what you do is you go and you look in the option chains, and options have expiration dates. Some days are weekly, sometimes are monthly. So January 17, 2025, 27 days from now, let's try to figure out, where how much money you can get for selling Coca-Cola options. Now, let's go a little bit further out in time to let's look at March. Okay, March to 90 days from now, and you want to potentially buy Coca-Cola for $55 a share. How much money can you get? Well, you look at the strike price. Here's the 55 strike price. The put options are on the right-hand side, call options on the left. $55 at the end of trading yesterday on December 20th, 2024. These put options were trading for about roughly, let's say 34 cents per contract. You can see here's the bid, 29 cents, ask 38 cents, something in the middle, roughly 33 cents a contract. That's 33 actual dollars that you would get in your pocket for selling the $55 put option. Now, if you sell 10 of those things, you'll get $330. Now you're obligating yourself to buy 1,000 shares. If you sell one contract, you'll get $33. You're obligating yourself to buy 100 shares. So you have to play with the amount that you're comfortable with playing. $33, is that something that you want to do? If you look at a stock, let's go to Apple here. And let's also go out to March and say Apple's at $255. Where would you be comfortable potentially buying Apple? Let's just say you're good at that $200 a share, you'd be real happy to buy Apple. Well, the 200 puts for March are trading about, let's say, 97 cents per contract. That's 97 actual dollars you would get for every contract you sell. Okay, now if you go further out in time, let's look at June of 2025. Those same 200 puts are worth now. Let's wait for the numbers to populate here. Those things are worth about, I'd say, $265, $270 each. So the further out in time you go, the more money you will get. It just depends on how long you're willing to give the stock the chance to move down to your strike price. So this is what it's all about. If there's a stock that you like, that you don't want to buy it at its current price, and you want to buy it at a lower price, instead of just sitting there and waiting for the stock to drop, which it may never do, be proactive, sell a put option like Warren Buffett did, and collect your cash. Now, as I said, we're never going to play on the same scale as Warren Buffett, but you can still make money by selling put options. You will collect these 200 puts, $265 just for your obligation to buy 100 shares at a price that you're willing to pay. Now, as I said, you wait until expiration. Either the stock's going to be below your strike price or it's going to be above your strike price. If it's above the strike price, you're just going to walk away with your money. You won't get to buy the shares. Oh, well. So you do the trade again for another expiration month. If the stock does fall to your strike price or lower, then you have to fulfill the obligation and buy the shares and pay for those shares at that time. Now you're the owner of those shares, and the stock could rally all the way back up to however high it wants to go. So there's only two scenarios. Either the stock's going to drop below the strike price or it's going to stay above. Very simple. Now, us as put option sellers, that's all that we do. So if you want to learn more about selling put options other than this little story that I told you, go to our website, smartoptionseller.com. This is what we do. We sell put options. Get our free ebook right here. Click on the free ebook. Put Selling Basics. It's all about put selling, what it is, why we love to do it. Put your name and email address here. We'll send you an email back with a free copy. If you want to get into a much deeper dive, we have our video series. It's a 5-part video series, about 5 hours, going deep dive into what put selling's all about. Okay. Also, the services that we have 2 newsletters. Okay. It's all about selling put options. This one, selling put option credit spreads. And we have our coaching sessions. If you want to learn more about what it's all about, have a look. We have our 2-week special going on till the end of the year. Prices are discounted. Okay. So down in the links, down in the description below, I've got all the information about our newsletters, our video series, the discounts until the end of the year. In the description as well, I have other links and books and websites for you to check out that can help you with your options trading game. So that's what it's all about. Selling put options. One of the richest men on earth, Warren Buffett's worth, like I said, about $150 billion. A lot of that money's come from selling put options. Okay. $7.5 million just for his obligation to buy stock that he wanted at a price that he wanted. We all can do the same. That's what we do as well. There's a stock out there that you want, sell a put option. Just make sure that it's a stock you like and make sure that you have the cash to cover the purchase amount if you have to buy the shares. All right, that's all from me today. I'm going to put some other videos on the screen here about selling put options. Don't forget to look down in the description. Give me a thumbs up, give me a like, leave me a comment, send me an email. I'll always answer emails. Make these free videos for the trading community. We want to help each other out. All right, that's all for me today. I'll see everyone in the next one. This is Lee Lowell signing off.